I didn't plan for being a value creation focused consultant, right? I started my career as an entrepreneur myself, invested more than, like, I would say, 1.5 2 million Indian rupees in 1992, which is a big money at that point. One is from a trends perspective. Second is from a IT costs optimization and leveraging the new technology perspective, right?
Welcome to Tech Bites with Ash, where we discuss trends in digital technology that support true business outcomes. I'm Ashu Bhatia, a consultant, an author, and a practitioner of all practical insights on your technology investments. Well, hello there, and welcome back to my channel, Tech Bites with Ash. Today, I have a great pleasure of chatting with Kiran Kumar, a great friend, an old colleague who has a ton of experience in technology transformation. Kiran has over 30 years of experience doing business transformation, leveraging mostly technology all across US as well as India. He has worked with 200 plus Fortune companies as well as currently with private equity firms. He is very focused on true value creation for strategies around growth, around restructuring, around capability building, etc. An MBA from Booth, University of Chicago, and a computer science graduate. He just brings a great perspective on both technology and business and how we can leverage some of that to look for opportunities. So let's dive right in. Hey, Kiran, good to see you after a long time. Hopefully things are well at your end. I appreciate you taking the time. As I mentioned to you, I've started this podcast. I've already kind of introduced yourself, but I really appreciate folks like yourself with all of this industry experience, bringing the knowledge and providing it to the youngsters and paying it forward. So really appreciate your time.
Thank you, Ashu, and really appreciate you taking up this. And first of all, congratulations on starting this. And I've been watching your podcast. Great guests, great start, and good luck to you. And again, thanks for having me here.
Absolutely. No, thank you so much. I'm very excited to kind of jump in with your experience on certain things. But before we even talk a little bit about what you've been doing and how your journey entailed and some of specifics around what you do today, Kiran, I always like to talk. I think you and I met when we were working together in Avanade. So we were all consultants doing a lot of work for a lot of our clients. But I think your profile is so phenomenal with a lot of experience with a lot of clients. But talk to us a little bit about just to getting to know Kiran, right? So what really encouraged you to kind of pursue this career where you're doing so much technology and business transformation? How did you get here? Just talk to us a little bit about your journey.
That's really interesting. One is obviously I didn't plan for being a value creation focused consultant, right? I started my career as an entrepreneur myself, invested more than, like, I would say, 1.5 2 million Indian rupees in 1992, which is a big money at that point. So I started my career as an entrepreneur, started the business, ran it for a few years. And at that point, we used to have our finance business too. And then combining that finance business and the technology business and doing the selling and managing and people. So it just gave me a perspective that in an early age, for first 5 years of my career, I was 22, and by 27, 28, I kind of got a very, I would say, a hands-on training on how to think about finances, how to run the small businesses. And then a lot of things happened at that point where it shaped up my thinking that, okay, you know what, I'm not a programmer, even though I did my computer science engineering, but I know how to leverage these technologies to drive business value, right? The terminology may not be there at that point. We were not marketing the terminology, but we're actually doing that work. So that's how it started, and it continued. Fortunately for me, a couple of US-based companies came to me and said, "Hey, Kiran, can you start an offshore center for us? This Y2K, we need a lot of resources from there." So that I took it as an opportunity, and I just started helping them. And so it just went in a direction where I was in the technology space, but I was really driving the business outcomes for certain businesses, right? So that's how it slowly evolved, and it took a natural progression into this space. And fast forward, I think close to 30 years now, I'm at this place in one of the best industries in the world, private equity industries, creating value for the stakeholders. That's how it just happened. So
It's
it
amazing.
was not actually planned, but it happened.
So it's kind of like what they say in sports, catch them young. So you started pretty young, early in your career, kind of dealing with tinkering with technology, but really seeing what the business outcomes can be. That's phenomenal. So where did you grow up? Like how did the environment where you grew up? It sounds like you kind of jumped into entrepreneurship very early in your career. But like, what were those influences that shaped up what you are today?
So I'm basically from Hyderabad. It's one of the buzzing towns these days in India. And I just heard that Hyderabad has Hyderabad or a couple of other cities combined has about almost 400 GCCs. They are getting this contract signed, so it's a buzzing city. So I'm born, brought up here, and my dad was a headmaster in the school. So I come from a
Wow.
very middle class background, very focused on education, disciplined approach from our child since our childhood, and I did my engineering in computer sciences. So from a business perspective, right, it just happened where I went into a software training institute to learn C++ program, Unix and C programming. So one of the faculties said, Kiran, you know what? I want to start a training center. Are you interested?
Wow.
Then suddenly the whole thing changed, right? One thing triggered and said, okay. And then I came and I spoke to my dad. I said, Dad, already my dad was running a finance business and all that. So I said, Dad, this is what they are saying. And by then my dad already fixed my marriage. So it
Wow.
just happened that my marriage is already there. In Indian culture, we have that in some places, not everybody. So that's how I started. And then the business came into play, and the ecosystem was, we had friends in the my relatives were in the business, and of course in the both education business and bureaucracy and all that stuff. So I think that's how it started, and my influence was primarily that I think that hunger to do something, right? People always say that you realize after 10-15 years of experiencing that, and that's what happened with me too. I had that hunger to do this, and that ecosystem helped me to start something. That's how I started early, even my personal life as getting married and also the business, everything else.
That's great, man. That's a great story because, to your point, I think it's the hunger, it's that curiosity that really kind of drives us through. So that's great to see because I think you mentioned in your introduction, and I've already kind of introduced you, but you mentioned private equity, right? Very exciting industry because a lot of my audience, and we talk a lot with my audience in general, that people understand, hey, investment banking, venture capitalism, or private equity, but the key in private equity is that, as you know, you actually own, you do your due diligence of which assets to look at, you own them, you operate them, you make them better before maybe you sell them and exit them. So that's, you're committed as an industry, right? So you clearly, which assets do you want to critically look at, what levels of growth would you want to see, and then some muscle memory or scar tissue to make things better, both from technology, business, and operations. That's something that you do, I guess, in your daily life. So let's jump right in, right? One of the things that a lot of our audience asks about is that, yes, technology is all pervasive. Digital transformation is such a broad term used everywhere. But what are some of the trends that you see from your vantage point, having worked so closely with so many different firms on just pure IT spend and analysis and optimization? Because at the end of the day, I understand that if it's a cost center, it's centered to almost every business function. But how are you seeing some of that to say, this is how people are using technology to optimize their spend?
So there are two aspects to it, right? One is from a trends perspective. Second is from a IT costs optimization and leveraging the new technology perspective, right? So if I look at the private equity industry where I am today, I see a lot of change happening post COVID. Number one is because the reason is, especially the lower mid market and the mid market space, they started accepting the global delivery models much more. And so, from an IT cost perspective, the cost reductions leveraging the global delivery models and the global resources at a low cost resource and all, it's been accepted. Earlier, if you remember, in our days in Accenture and Avanade and all that, only large companies used to have offshoring and BPO operations and all that stuff in the global centers. But now, if I look at the companies that we work with 35, 40, 50, 100 million size companies, they also have offshore centers. They are leveraging offshore partners. So from a cost perspective, that is a little bit taken care. And the trends perspective, right? Private equity industry has evolved a lot, leveraging the IT. And the number one thing with what I observed, which was not there before, is a role of IT operating partner evolving. So many of the PE firms, they started having this portfolio operations groups. Earlier they used to have, today also they have, but the focus on IT has increased a lot, and they are inducting this senior, been there, done that kind of senior executives from the IT space as their operating partners. So the decision making on the IT very informed, and also it's, I would say, it's not easy for anybody and everybody can go and just influence something, right? So these IT operating partner roles have evolved a lot. And the other thing happening is what I'm just seeing. I've been having meetings here in India, couple of meetings in last 3-4 days. The global capability center concept is picking up, and people are no longer just looking at offshores as a cost cutting measure. So the trend is moving towards, okay, how do I make my offshore strategy as a competitive advantage for me, right? So this PE, private equity industry, even in the lower mid-market space, it's picking up. So from a trends perspective, I see this huge shift post-COVID mindset change, and after that, taking advantage of having this global centers for the innovation and all that stuff. And from a cost perspective, if I have to think about it, right? Look at historically, right? When we used to have data centers, then the cloud came, and then cloud kind of transformed the whole data center business.
Yep.
Then the on-prem softwares, then the SaaS models came. It transformed how the business softwares have been used. Many of the IT has become more like a broker in some companies, right? So from that perspective, the technology leverage has been very, very well taken. Now the companies are moving towards, how do I go to the next level where the technology is actually impacting my business growth, right? They're talking about how my technology is going to impact my value creation story. So that's where it is. So that's what I'm seeing, and that's what I'm advocating with my clients too. Like, what? Hey, some of the things are table stakes.
Yeah.
Cost cutting, cost optimization, leveraging this global centers and all. But how do we take it to the one notch up and say, hey, how am I going to create that competitive advantage by having this, capabilities for you?
No, that's a great perspective, and that's very interesting because, to your point, right? When I was doing a lot of work with Accenture, doing a lot of M&A due diligence, I think we were on the same team somewhere. But yes, big companies were doing it. But as you said, the focus on small, medium scale businesses to leverage something like this and then go to the global capability center. And that's a great term, right? GCC, Global Capability Center. It's not just about cost. It's not about arbitrage in cost itself. It's about capability, right? As you said.
Right. Yep.
How do you use some of the specialized skills in terms of leveraging that to make your business better? So that leads to the next question, and you kind of alluded to it, right? Initially, a lot about wreaking operational excellence, understanding how to get more from less, cost cutting, etc. But you mentioned the word innovation as well, right? So you said people are trying to do new business models. They're trying to push the limits of where technology can be leveraged. So that balance between, optimizing cost and still doing innovation, so keeping the business as usual, but then looking at what new S-curve one needs to focus on, how is that going, whether it's SMBs or even the large-scale businesses? Because that's the billion-dollar question companies struggle with, saying, how much do I balance running my operation versus really innovating?
So it goes back to the business strategy of that company. Number one is, do they want to be a category leader or a, industry leader or something like that? Even if they are in the small space, right? They want to be the go-to company for something in their own space, in their own industry or sub-industry and all that. So from an innovation perspective, now the companies have a great advantage of being global, getting that global resource pool and talent and all that. So, for example, recently I've seen here in my own city, pharma companies are coming in, and setting up the GCCs. The GCC, not only from an IT perspective, they are supporting, but more around, the research and all that goes in the back end, right?
Wow.
Product research, new product marketing, and various other things that come into play, and they are taking their completely making the GCC as an extension of their company, leveraging the global talent and low cost talent and low cost real estate, facilities and various other things, and extending it. So the innovation is, accelerating now, because if you take, if somebody has to set up a 300 people innovation center in North Carolina or Chicago or some other place versus an innovation center in one of these places like in India, there's a huge difference of the cost, and the talent is now very homogeneous. Folks from US are traveling here, say, spending time a month and a half, 2 months here. The culture has been very homogeneous now. The US based company culture, and here, they are, even the branding is same. So the companies are really accepting the fact that we cannot restrict ourselves to one geography. Now we need to expand. So that's why the innovation aspect is, stepping up while keeping the costs low, because it's about one third, probably one third cost as compared to others, but you have the same talent working for you. You have same folks in US or UK or wherever it is, really having that interest to come in, work with the folks here, and these folks from here going to the US and UK and other countries to work from there. So cost and innovation balance is happening. In fact, the companies are taking great advantage, are in the great advantage situation right now to leverage this unique concept that's been there for a long time. But again, as I said in the earlier in our conversation, the acceptance is more and more right now.
Yeah. No, that's interesting, because some of the things that at least I hear from a lot of our clients who are dealing. So as you said, pharmaceutical industry is a very interesting one, because to your point, they do a lot of R&D, a lot of things before the product is even developed, and then as it is, of course, operations, manufacturing, supply chain, and all that. But even in the research, if you're leveraging some things like GCC, where I think what you mentioned is it's a level playing field. If you have the right capabilities and the experience, that you're trying to say, okay, this is where people were, whether it's any kind of company that's in pharmaceutical, whether they worked in the US or in the UK or in India, doesn't matter. It's about what they're trying to do with the product. So that's going to be key. One thing in terms of cost and innovation thing is, in fact, there was something, another podcast I did was I was talking to a gentleman, he's a CIO of a firm, that, that whole balance of discretionary versus non-discretionary budget for at least technology spend, typically it should be 30-40, right? So you spend maybe 40-60, sorry. So 60% is what you do on keep the lights on, but 40% should be on cutting edge new things. But he was amazed, because he came from some industries which was a little more lagging. There was more legacy. It was almost 10-90 split. And sometimes I've seen 15-80 or 20-80. And people are always trying to say that I need to push some of my metrics for keep the lights on into more strategic investments, whether it's, as you said, cloud or data or AI, so I can really reap more benefits. So what kind of metrics do you see evolving in IT efficiency? Because the biggest question of being efficient and effective, right? So doing the right things and doing them, well, is something that the technology department always deals with. So what are you seeing some of those metrics evolve in terms of what they should be doing?
So before we jump into metrics, right, the from a PE angle perspective, private equity angle perspective, as you pointed out earlier in our call, in our discussion right now, private equity is investing in an asset, and they're transforming the asset and selling it for a profit, right? So the transformation, whatever the transformation is happening right now, and they are getting that benefit because of this, cost reduction, moving from OPEX to CAPEX, and, business as usual to innovation and all that. So because of this new technologies and all, their business as usual cost is also decreasing a bit. Earlier, it used to be data centers and this, huge ERP systems and various other things. Now, these things have changed. Many companies are saying, we don't want too much customization. We just go with the vanilla models, right? Second thing is, even within the same industry, there are many industry specific technology innovations have come from from a software and all that perspective. So the lot of implementation costs are also gone down. So the overall budgets, they can easily split between innovation and all. And again, the innovation budget again depends on which industry they are in, what is the competitive advantage they want to build, and they are good with what they have, or they really want to bring more products into the market. Pharma is obviously competitive enough to bring a lot of new products, right? So if they're in manufacturing, it's only about creating some new product or expanding the business. So that's how I think about these things, and I think it depends on the industry and the business strategy. From that perspective, how do I spend my $10, 5 year or 4 years, something like that. Coming to the metrics, right? One metric I'm always attached to is, what is IT spend, IT spend as a percentage of revenue.
Yeah.
And that those are the simple metrics. It depends on the industry and size of the company and various things. And then some of the metrics that I see is, what kind of EBITDA contribution has my IT investment is doing. For example, if I'm investing in a certain enterprise application and helping my sales, operations, finance, and other functions, marketing and other functions, how much productivity has increased. So, and then if I introduced a new marketing software or a sales software, does my CSAT scores increased, right? These are value creation metrics that we look at. And I think we need to monitor closely. And the most important piece is the governance part, right? Because many companies fail to have a neutral governance body. That's an important piece. When I say neutral, it's very important because somebody has to really manage this. I call it, people call it governance. I always say this, hey, value management office, or something like that, right?
Yeah.
So the company should go there and track these kind of metrics, and there are a bunch of other metrics in operational metrics we can come into play. But from a value creation lens perspective, EBITDA makes sense. EBITDA is important.
Yeah.
And from a how much impact is on the cash flow and working capital, and those kind of metrics we should track. And everything, I always say this to my clients and folks I work with. I say every initiative has to tie back to a business benefit, right? Whichever initiative you pick up, IT initiative, it should directly tie to some business benefit that we are talking about. It is going to increase our global outreach, or business expansion, or top line growth, or cost savings, or whichever it is, right? So those metrics should be tied to the initiative. Then only you start spending your dollar.
That makes so much sense, right? Because I think a lot of the firms, and we've all been there, both on the side of the industry, from consulting, helping, and partnerships. The key is that any transformation, it cannot be technology first mindset. It has to be business first. It has to be value first, for sure. One of the things, a very interesting thing that you mentioned was that EBITDA contribution, right? It's funny because it reminded me of I was talking to another gentleman, a good client of mine. He says, some firms see EBITDA, but we see inefficiencies begging for automation. That's how they label their private equity firm. And what it, of course, meant was that how do you automate all this, right? So is it from due diligence or operations or post-sale? How do you automate this whole thing to wreak more EBITDA? And of course, that leads to the biggest monster of the question is, how do you leverage automation or AI, and how is that impacting your industry, right? Because the same gentleman, he just had a funny, he's a chief digital officer somewhere. He says these days, it used to be like, he works in the retail industry. He joked one time, said, they used to say, just add water and you get instant, right? Noodles or something. Now it's like, just add AI and you have instant value creation, right? So apart from really doing it and, optimizing it, he talked a lot about saying, hey, this is how our industry is changing. But I'm curious from your vantage point, I know there's so much happening in AI and stuff that as we talk, things are, progressing. But how are you seeing some of the potentials of this technology for specifically private equity and what you're doing for, companies?
So one is private equity. Some of the firms, like the large ones, right? If you take KKRs of the world and Advents and others, and Vista Equity and all these companies, they are really accelerating, and they are in the forefront. The way we talk about Accentures and
Yeah.
IBMs in our
Yeah.
consulting world, they're already thinking ahead and investing in various other technologies. But in the mid market and lower mid market space, with the smaller funds, they also started feeling the need for AI and automation because they could see the value now. It's already tested in most of the industries and most of the places that it works, right? Because the automation started with basic function process automation, then it became robotic process automation. Now it's
Right.
becoming adding AI to the whole thing, and there is like a automated help desk tickets resolution. So there is a lot of progression happened in that space. So they could clearly see how automation can add uh, additional points to the EBITDA, right? Because it's all about EBITDA, valuation, multiples, and value. So the acceptance is there, number one. Number two is they want to do it, but they are a little bit hesitant about what they are getting into because the clarity is not there. We talk about AI and implementing this agentic AI or various other data, AI, ML
Yeah.
stuff and products, right? But most of the companies in the private equity mid market and lower mid market space, they have a very, I would say, bad data sitting with them. I'll
Mm.
give you one example. In one of the clients I worked with, they had a 25-year-old software which has been, band-aided many times, and it's still sitting in the old legacy software, and it won't talk to anybody, any other software, any other systems, and all that. And if that kind of scenarios are present in a company, right? Putting AI layer on top of it doesn't even help the companies, right? So your data needs to be strong, your foundation needs to be strong. So they are a little bit concerned about what am I getting into, how much it's going to cost,
Yep.
and where it's going to end, how the return on investment is going to come, right? So I think as a consultants, we need to give these companies that clarity, that help, and I would say the acceptance is there, the willingness is there. We just need to build that confidence that let's start small, let's start with one piece, and then move forward. That's what I'm seeing. And the last but not least, I think at some point every company is going to be forced to doing this because that becomes one of those core capabilities which adds to the value creation story. If I remember one example in one of the clients where I was working in my previous company before my PIP experience, they said, hey, we are shortlisting companies only if they have offshore presence. So think about it. If people may start talking about, okay, you know what? Look for a manufacturing company as an asset to buy if they have an automated process already in place. They might say that. Who knows, right?
Yeah, yeah, yeah. It
Things
becomes
might
table
change.
stakes
Exactly.
almost to
Yeah.
say that it's a mandate that you need to be
Yeah.
looking at. Wow, that's interesting. To have to look at assets or companies that have already got an offshore center, and now, to your point, maybe automation or AI, leverage into that. And that's great. I think to your point, I think acceptance is there. Clarity, you said a great point. Clarity is very important because there's so much in that space. People want to be very careful. And your example about the data just reminded me. I was working with a client recently. They're like, well, again, it'll come to the SAP discussion that, hey, SAP is expensive. We're doing things. They want to look for migration onto some platform. And you even mentioned they don't want to customize more. They want to use out of the box. So they were looking at Microsoft Dynamics or Oracle or Zoho and others that are available. But the key is data hygiene, how much customization, what can you do to kind of really leverage that? And that always comes down to saying, hey, data is still so important. So hit the nail on the head to say that whatever you do, make sure your basics are correct, right? So this is great. No, this is awesome, Kiran. I know you and I can go on, but this is great perspective on some of the things that private equity looks at to help their clients. I think in terms of us trying to wrap up, I always like to say, as a key takeaway, right, for the audience, the young consultants listening to this, or the business folks that are kind of doing, what is the one thing that you want to kind of give to them as a takeaway from this session?
I think the way I look at it is right. Always think from a business strategy start with business strategy. Even though if you're a technology consultant, start with business strategy. Look at the business model, how they operate, what they do, and then understand their investment thesis. Especially, I'm talking from a PE, private equity lens, investment thesis, and understand their holding periods and various other things, right? And then start thinking about what transformation makes sense and what kind of investments make sense, including our technology transformation, right? So you need to take a very uh, I would say a systematic approach. That's what I would like to say to any young consultant who wants to venture into this and who wants to be an advisor to a PE firm or a technology consultant to a PE firm. Um, do not ignore the business and the stakeholder aspirations. That's the most important. Jumping into technology, selecting a technology, I would say it's a third or fourth step in the process.
Makes sense. No, that's good advice. Very good advice. In terms of we all kind of consume so much working with clients. Is there a specific book, website, or blog, or something that you want to recommend the listeners to kind of deep into? I'm sure there's a ton. It's funny. I was so looking forward to talking to you today, because what you do is something that I kind of use as a title for my book. But value creation is near and dear to everyone. But anything that you recommend for our audience to kind of get better at this stuff?
I think, see, I'm a big book lover. I read a lot of books, and I don't go into the blogs a lot, but I hear a lot of podcasts. My workout time is my podcast time.
Excellent.
Or my walking time. If I'm walking for 45 minutes, I'm finishing one or two podcasts. So one book that really influenced me almost 25, 30 years ago is Management Thoughts by Batra and Batra. It's a wonderful book, one-liners, two-liners. It just gives you how to manage family, how to manage customers, how to manage business, how to manage friends, kind of thing, right? Then another great book that I personally feel everybody should read is Principles by Ray Dalio. Great insights, very long read, but it's all worth it. And for interpersonal skills, it's definitely helpful. It helped me a lot. In fact, I should thank my coach who suggested this book to me. There's a book called Three Vital Questions. Beautiful book, short book, and it just changed the perspective of how do you look at the situations you are in, right? Positive versus negative. I would suggest folks read that. Yeah, and from a podcast perspective, I hear a lot. I go by the titles of that specific podcast, but usually I hear a lot of Adam Grant.
Yep.
Rethinking is one. I just love Adam. His perspectives are awesome. Then there's another one which is very relevant to my private equity industry. It's by Sean Mooney, Karma School of Business. Great, I would say, great guests. Nice topics, very relevant topics to the private equity industry. So that's what is my, I would say, consumption of knowledge from
this is
folks.
great. I will have all of that in our description here, because that's a great good mine of a lot of knowledge. So as you said, in your Me Too time, whether you're working out or driving or something, that you're consuming a lot of good stuff. So I'll definitely be sure to share that. In terms of our audience trying to follow you, Kiran, or your work, anything that I can share in terms of your LinkedIn or anything that you would like to suggest?
Yeah, please go ahead and share my LinkedIn. I'm Kiran Kumar PV on LinkedIn from Chicago. And I'm available on email always, kiranxp76@gmail.com. And I love mentoring. And I already have 2 or 3 mentors at any point of time reaching out and doing. So I love doing that. And every weekend I spend 3, 4, 5 hours working with startup founders and various other folks, just as a passion, nothing, I don't expect anything from them, but it helps me learn too. So anybody trying to reach out, happy to spend time.
Absolutely. No, thank you so much. As I say, right, the best way to learn is to teach. And absolutely, I'll share that as well. And really appreciate your time again, Kiran. Great insights, great topic, and look forward to talking to you again.
Thanks again, Ashok. Good luck and great chatting with you.
Thanks so much.